How we doing? How we doing? Today is Monday, July 29th, 2024. Just doing a real estate tap-in with you for today. So everybody, we're gonna get news about the economy, a lot of data on, the job market and how companies, the earnings reports and things like that. We've already started to see that a big company like McDonald's is showing a decline. I think I saw a decline with Heineken, the beer company. So, we're starting to see the effects of the slowing down of the economy right now. And that's probably the biggest reason that the Fed is going to drop interest rates. They're starting to see some weakness, with these companies. I mean, I think they've seen it for a while, but now they're making it public, so to speak, with these earnings coming down. Because we got an earnings report on some of these companies where it's coming down, but then last week we got it saying that the overall GDP was up, or about where they thought it would come in. So it's just the cracks are there, starting to show up more and more. We're starting to see more supply when it comes to real estate on the market, and typically this is the time of the year where that starts to slow down, because we're in August. If you try to buy a house, moving when your kids are going back to school, or getting ready to go back to school, is kind of a headache. So a lot of people really don't buy. Buying starts to slow down at this part of the year, but we're starting to see an increase in supply. So we're starting probably to see more stressed sellers or forced sellers, and then just some people that probably want to get ahead of what they see coming. So I say all that to say that there will be deals out there for people that are in the market. I would definitely suggest that you negotiate, and maybe if they don't take it today, they may come back to you in 30 days, 60 days, something like that, and then may want to take your offer. So, and that's for an investor as well as someone that's looking for a primary residence, because I still see these prices on things are just especially here where I live in New Jersey, they are way out of whack. But that's the market. That's the market that we're in. That things kind of went bananas since COVID, and I feel as though that there'll be some type of correction. Just how steep that is, we'll have to see. But more layoffs are happening. These companies. If you go to dailyjobcuts.com, you'll see the job cuts as well as companies that are, closing, filing for bankruptcy. So you're starting to see that show up more, in the data and any information that comes out on the news and stuff like that. So it's definitely an inflection point, a turning point. We're probably moving into more of a buyer's market for those who are in position to do that. So there's going to be opportunities out there, and again, we always try to bring this back to Real Estate Notes. We are in the midst of going through this seller financing and real estate notes training, I guess you would call it, or information about it, learning about it, understanding it, using it to your advantage on any way that you're trying to come into the market. So we'll continue that tomorrow, Tuesday and Thursday. We'll talk about the advantages and disadvantages of seller financing. We'll do that one on Tuesday, and then on Thursday we'll go over the steps to what you need to do in order to have success when doing seller financing. You know, what are the things that you need to have in place and everything like that. So Tuesday and Thursday this week, 8 p.m. Eastern Standard Time. We'll attach the link to the video if you want to join. If not, you can always go to the YouTube channel, Abundant Capital Group. There's a playlist that says seller financing and real estate notes. Right now, we're focusing on the seller financing part. And then, you know, as it continues, we'll get over into the note side of things. But, you know, this particular strategy and way to acquire real estate is going to have a good stretch here. I would say over the next, you know, 1 to 2 years, if not longer, just depending on, you know, what this recession that we're going into looks like, and you know how bad it becomes. So, you know, I think you should understand it and use it to your advantage if you're trying to come into real estate, or if you're already in real estate. I think you can use this to your advantage right now. You know, banks are tightening up, lending is tightening up, and it has been for a while, and that's only going to continue as these, you know, this pullback or slowing of the economy happens. And when this economy slows down from a credit standpoint, it affects the economy greatly. It's going to have a great effect on it because everything these days is based on credit. You know, it's no longer capitalism. It's more of a credit-based system. So if they can't continue to create credit, the economy, you know, it's gonna go through a rough patch. And so that's what we do with seller financing and real estate notes, is that we're actually creating, you know, that credit for people to extend to them, and then, you know, be able to collect those payments over time. So, all right, everyone, you have a good one, and we'll talk to you soon.